Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
What's up, everybody? Dave Bartosiak here with your top stock pick of the week. It is me and Tracy Reinick. She's going to go number 2. I'm going to go number 1, talking about Build-A-Bear Workshop, ticker BBW. Zacks rank number 1 strong buy right now. There has been a retail renaissance, my friends. You can see it in a ton of these names, like American Eagle had a great report and started rocketing, and Build-A-Bear sort of did the same, but it's funny because it wasn't until after American Eagle came out with theirs that Build-A-Bear really started rocking. But we've got a B for value, B for growth, A for momentum, help it round out with a VGM composite score of A. Like I said, retail to the top 12% of our Zacks industry rank right now. So things are moving in the right direction. I'm going to skip on down here to these estimates. So we've got 7.4% revenue growth the current year, 3.15% next year. So that's kind of ho-hum, right? Those aren't huge numbers. But when you're talking about retail in a space that has been under a lot of pressure, seeing something like this is great. Looking at the current year, earnings growth, 6.9% this year, 10.38% next year. So there's an acceleration of earnings despite revenue just kind of, a little over 3% next year after 7% this year. So you're not seeing that on the revenue side. So this means we've got more efficiency. We've got better margins. That tells me management is starting to figure things out. Who else is figuring it out? Analysts. Look at the current year number. Our Zacks consensus estimates gone from 384 to 388 to 403 over the course of the last really 60 days. If you look at next year's number, up from 4.25 to 432 to 445. That's because we've had 3 analysts jack up that number for the current year over the course of the last 60 days. Only one to the downside. If you look at next year, you got 2 people pushing it to the upside. And look at these surprises. Really been on a roll. This last quarter number, and I'm showing this because unapologetically, this is in Surprise Trader, so I got to brag about it a little bit. Stock is up over 30% since we added it to the portfolio. A big 40% surprise here this last quarter. Quarter before, 36%, 4.6%, 4.29%. So on average, it's beat by about 17 cents a quarter. Those are some pretty good numbers. One of my favorite things to look at, folks, price, consensus, and EPS surprise chart on Zacks.com. And while this is pretty good, I guess it could be better. One thing I don't like about it is these sort of periods where it overpromises and then underdelivers, right? We start high with the estimates and then they tick on down. I don't really like that. I think that's why you get some of these valleys, these peaks and valleys in the stock price, because everybody gets all jazzed up and then they get disappointed. So it does offer up some opportunities, though, right? If you know the overall trend is going in a positive direction, when you get these little pullbacks, you can say, you know what, a little bit of a disappointment, but I know overall the stock is rocking and rolling, and it has been. And you can see these big green candles here, or arrows rather, those are the earnings beats. You had a couple of misses in 2024, one miss in 23, but it looks to me like they are riding the ship over at Build-A-Bear. So that's why I have Build-A-Bear BBW as my top stock pick of the week. Tracy, what do you have for us?
Thanks, Dave. So I'm bringing a completely different type of company than what Dave just talked about. But the thing they have in common is the Zacks number 1 rank, the strong buy, and something good is going on with my company, MasTec, the same way with Dave's. So MasTec, ticker MTZ, is in the construction side, and they are a construction and engineering firm that is building power generation. So you can imagine what is going on right now with the data centers and the amount of power that they need, that MasTec is very busy. And we can see that in the earnings estimates, which we're going to take a look at right now. So MasTec, last reported in July, they did have record revenue up 20%, but it was an all-time record revenue for the quarter. Their backlog also jumped 4% quarter over quarter and 23% year over year. Just scrolling down a bit, you can see on this price consensus and surprise chart, which is one of my favorites, and it's just shown right away on the quote page now. If you go to Zacks.com, you can see it's got a big string of earnings beats here, which we like to see. Just this one miss in the last 5 years. And now you can see what's happening with the earnings. It was a little rocky a couple of years ago, but now this is the best of all worlds. And you can see this earnings growth happening for both into 2026, which is this light blue line, and then into 2027. So we're already thinking, almost 2 years ahead of time. And scrolling down to look at the chart here, this is also one of my favorite things to look at, the sales and EPS growth rates. You can see 25 with this big earnings growth. Earnings are on the right, sales are on the left. Double-digit sales growth, though, for a company of this size, 13 billion market cap, that's very good. And a little bit less growth next year at 7.3%, but look at those earnings up another 21%. And the Zacks rank is based on changes to analysts' earnings estimates. So we want to go look at the detailed estimates and kind of just see where we are. And for the full year, we see 6 that are higher in the last 60 days. So that was after the second quarter earnings report. The company did beat and raised their earnings outlook for the full year. So the analysts are all just responding to that. And you can see it's now expected to be 624, up from 608 before they raised it. And then next year, though, the analysts are like, if they're doing this now, we like what we see, so we're going to raise next year. So 7 higher for next year in the last 60 days. And then we have the earnings of 760. And that's where we're getting the 21% earnings growth here for next year on top of this 57% for this year. Now, how expensive is the stock? Is it cheap? Is it not? It's, had a big run here. But PE still at 28. That is higher than what it was before this bigger run started. But you are getting that great earnings growth. And right now, what you're buying with any of these construction, engineering type companies is this tremendous earnings growth. There's 500 billion being spent on AI infrastructure just this year alone. And that includes the data centers, but it's going to include power. They also do renewables, and they're on the pipeline side on energy. So they're in these key areas that are going to continue to see strong growth, at least for the next couple of years. So if there's any pullback on this stock, you might want to keep it on your watch list so that you can get in maybe at a little bit cheaper price. There are always pullbacks on every stock, even ones like MasTec that have this very bullish outlook. So the Zacks rank is designed to show us the companies that have the best earnings outlooks, and the Zacks number 1 strong buys certainly have that. So we have a couple of interesting ones this week. Be sure to tune in every week to watch our top stock picks of the week. You can get us on YouTube because we're bringing you companies in a variety of industries, as you can see today, and they have rising earnings estimates. That's what you want as an investor. You want to see that earnings growth, not the earnings declines that some companies are seeing right now. So be sure to subscribe on our YouTube channel. You can go to Zacks.com/YouTube to get all of our top stock picks and all of our other great videos that give you a lot of stock picks as well. But be sure to find us somewhere, and we'll see you again next week with some more strong buy stocks.